Well, yes, India's steel production continues to remain in focus. In fact, the entire sector continues to remain in focus. First up, let's talk about the production data, where in the month of January, India's steel production rose by about 10.5% on a year-on-year basis. And even last year, in fiscal 25, production had risen at a similar level. So clearly, India's production trend continues to remain on an uptrend. But Citi has come out with a very interesting report. Now, India's steel production, as I mentioned, in FY25 stood at 165 million tons, which was higher than EU and UK's combined steel production, which stood at 129 million tons. And on the back of this data, Citi has come out with a report, and they say that if India continues to grow its steel production at this level over the next 3 years, India could surpass EU and US over the next 3 years. So that's very interesting data that Citi has come out with in its steel report. Now let's also talk about pricing trend, and that's one theme which is playing out within the steel sector. Steel prices have been on an uptrend. In fact, in the month of January, steel prices rose by about 4,100 rupees per ton, and HRC prices in the domestic market are now trading above 51,000 rupees per ton. This, of course, is led by several factors. One, safeguard duty, which is in place, rising raw material prices, and lower imports into the country. So these are some of the factors that are aiding the up move in steel prices in the domestic market. Now, as far as import parity is concerned, remember, imported steel prices are still at a premium of 6% as compared to domestic prices, which means that domestic steel mills still have the room to go ahead and increase prices. And this is the reason why analysts still believe that steel prices could rise from the current level. So two factors at play. One, production continues to surge, and second, steel prices are on an uptrend, and this trend is likely to continue going forward as well.